Morning, everybody. So I don't know if you've been to our class before. If you have, welcome back. We've been doing it for, I don't know, probably like 7 years now. So hopefully I do an okay job. But in the meantime, for you that are new, welcome as well. This is what we're going to do today. I know this might be a reverse mortgage class, but I have to tell you that we spend a little bit of time on reverse mortgages. I spend quite a bit of time on how we've really learned a reverse mortgage is a tool for realtors and loan officers to build relationships with older homeowners. And we're going to get into all that. And let's just kick it off. Let's just jump right into it. We will try to get your questions answered halfway through if I have time. We'll definitely do it at the end because I'm doing a 3-hour class in about 55 minutes. Here we go. So this is why I want you all to know about reverse mortgages. It's so that you know how a reverse mortgage works? Yeah, a little bit, but it's more than that. Since we've been doing these loans and the reverse mortgage and reverse mortgage purchase loan, what I've learned and what I've seen is that there are definite times when a reverse mortgage actually brings business to the realtor. And it's happening more and more. And because it's vital for you all to know how that happens, I'm just going to start off with the top 3 ways that I have seen a reverse mortgage actually help your business. Not even necessarily a reverse mortgage guy like me, but actual realtor business. So let's get into that. So the first thing I want you to know is that even though a lot of clients may start out thinking, I'm going to get a reverse mortgage on my house. I'm going to refinance and get rid of my mortgage payment, right? Because that's what a reverse mortgage does. I have to tell you that more than 50% don't ever get one. Yeah. Literally half that ask don't even get it. It's probably even a higher percentage than that. I'd say maybe more than 60% that ask never get a reverse. So what happens to them? That's the kicker. See, what I want everyone to realize is when a client is asking you about a reverse mortgage, they don't really want a reverse mortgage. That sounds funny. I'm a reverse mortgage guy. But what I've learned is that they're saying, look, I own a home, it has equity, and I'm trying to make my cash flow better. I'm trying to figure out maybe how to turn some of this equity into something that I can use to help my retirement. So the question to you about a reverse mortgage, I don't believe is about wanting a loan. It's about trying to figure out how they're going to use this asset to help in retirement. Now that you know that, and then when I tell you that more than half don't ever get the reverse, what does that mean to you as a realtor? It means I have a client who has a home, they have equity, they're not getting any other loans. They probably might need to sell this house to get some of that equity to work for them. They will end up selling that house and maybe downsizing, selling that house and moving out of state, selling that house and renting, all kinds of things. But the point is, don't think this is like somebody asking you, hey, do you know where I can refinance my 30-year fixed loan? That's not business for you. They're going to go refinance somewhere and keep their loan and make a payment. But when someone asks you for a reverse, they're saying, I need some help. And really the undertone is, you may be the one to help me by selling my house. So first bullet point, somebody asks you, don't let them out of your sights. There's a lot of clients out there that already need to sell their home and they know it. They've been in the home for a long time. Maybe the home needs repair. Maybe they've already tried to get loans. Maybe these are one of the people that have already said a reverse mortgage isn't going to work for me. So they know that they really need to sell that home, right? But yet we still have a problem that exists. They have to figure out how I'm going to buy my next home. Can I qualify for financing? Do I even want to have to worry about buying another home and getting a loan with a mortgage payment? So we need a tool that a client can use to buy their next home. They can use a loan where they don't necessarily have to bring on a mortgage payment. They can actually qualify for it. It's not like qualifying for a regular loan. And a reverse purchase can be that tool. You know, we're going to talk about the movement of homeowners. And just a quick note I want you to know is that National Association of Realtors, NAR, did a study 2019. Do you know that more than half the people selling their homes right now are 55 and older? Imagine a lot of these homeowners that said, I'm not going to move, they're moving. But they need a way to be able to qualify and get loans to buy their next home. A reverse purchase loan, we're going to talk all about how that works coming up. A third way that I think a reverse mortgage can help you with your listings is this. There's a lot of reverse mortgages out there already, ton of them, right? The government insured reverse mortgage we're going to talk about today has been around since 1990. So there's a lot of loans out there. Do you know most of these clients are their heirs? If you were to ask them, hey, when you pass away, have you figured out how the heir, your kids or your family are going to get control of your house? A lot of them will say, I don't know. We don't know. A lot of heirs are going to say, I didn't know I could get the house. And when a lot of family members get the house after their loved ones have passed away, a lot of them sell it. I've seen more of them sell it than keep it. So here's what I'm saying to y'all. We're going to help you with the conversation about anybody that has a reverse mortgage already. I want to help you become the agent that gets that listing when the unfortunate time comes when they pass away. It's happening. We're getting calls all the time from agents that are saying, hey, I ran into a client with a reverse mortgage. It's the son or the daughter, the mom passed away, the dad passed away. That's too late. That's already someone else's listing. Let's make sure that the reverse mortgage listings that come from people passing away are yours. We're going to talk all about that. So these are the three ways that we have seen over our last 15 years of doing reverse mortgages turn into business more for you than even for me as a loan guy. Why do I care about business for you? Well, of course, I know we live in a very symbiotic relationship in a world, right? And where if I'm helping you and one day somebody needs a loan or they need a reverse purchase loan, hopefully I can be the recipient of that. But whenever we can turn up a listing out of reverse, I want you to be the recipient of it. And that's why I'm happy you're here with me today. So let's get started learning a little bit about reverse mortgages now that we know how the top three ways they actually help your business. Okay, here we go. So what is a reverse mortgage? Hey, a lot of you already probably know this. Hopefully some of you have been to our class. Hopefully you've been to our class and we helped you know what it was, right? Well, what if you're cloudy or maybe you don't know what it is? Here we go. I want to give you a very easy way to remember what it is. Why? Because it's so important if a client asks you how a reverse mortgage works that you have some information for them. Because remember, half of them won't get a loan and you'll want to retain them as your client. So you're going to need to be able to capture that question, answer it, and keep them in your circle instead of them wandering off somewhere else, right? So if a client were to ask you, how does a reverse mortgage work? I saw it on TV. It looks great. You could say, look, here's really how it works. If you know how a regular loan works, maybe you have a regular loan in your house right now. You've borrowed money to buy the house, or you've borrowed money and refinanced. You did that a while ago, but you have a loan. And every month you get a statement, right? A regular loan. You make a payment. Some goes to principal, some goes to interest. Reverse mortgage is really much the same as a regular loan, except when that statement shows up and it shows what the costs are for the month. If the client decides, I really don't want to send that payment in this month, you don't have to. Whatever you do not send in, it'll simply be added to your balance. Simple example, let's say that a client has either borrowed $300,000 to buy a home or they've refinanced a home and have a $300,000 loan. Let's say the statement shows up and $1,500 is the cost for that month. Well, on a regular loan, you would send that in, right? But on the reverse, you could say, you know what? I'd rather keep that $1,500 in my pocket this month. Hey, no problem. No one cares. It's a reverse mortgage. Except that $1,500 that you decided not to send in is just added to the $300 you borrowed already. So next month you'll get a statement and you owe $1,500, right? We've added the $1,500 on. And that month you can make a decision again. So really every single month, believe it or not, a client is deciding what kind of loan do I want to have this month. If I want a regular loan, maybe I have some extra money. Hey, I'll make a payment. I don't have a reverse mortgage this month. I've actually paid what cost was, and I've kept my balance the same, or I've paid it down. Maybe next month, tight on cash. Hey, I'm not going to send a payment in. Okay, then your mortgage goes what? In reverse, it goes up. So reverse mortgage is really just a loan with an optional mortgage payment feature that a client decides what they want to do. If they want it to be reversed every single month for the rest of their lives, they don't have to send a payment in. If they want to control how much they owed, they or even the kids can decide, hey, maybe we want to send in a little bit this month. Maybe we want to send in a little bit each month so the balance doesn't go up quite as quick. It's always at the discretion of the client how the loan runs. But here's, I think, what's really important is that if that client does get that statement every month and they say, you know what, I don't want to send a payment in. I need it to do this. I need that money in my pocket. Well, if you do that every single month, let's say you get a reverse mortgage at 62 years old. Hey, by the way, you can get a reverse mortgage at 55 years old now. But anyways, that's a different topic. But let's say you get a reverse mortgage at 62 and you live life expectancy to about 90 when you're 62, right? Because I don't know if you know, but you live longer the older you get. Does that make? Yeah, that's right. Okay, I'll talk about that in a minute. But if you, let's say you have this loan for 30 years and you miss 360 payments, it doesn't matter. The loan is for your lifetime. It's for the client's lifetime. It's not for a predetermined amount of time. If you live to 100 years old and you never made a payment, hey, that's the problem of the investor, right? They're the ones that lent the money. They're the ones that are not collecting a payment. They're waiting. They literally are waiting. The investors, the big Wall Street firms that give us the monies for these loans, they just sit and wait to get paid when the house sells. All those payments that haven't been made just add up. And then one day the house sells and they get paid back, but they have to wait. So it's for the lifetime of the borrower. Now, of course, one of the reasons I'm here today is a reverse mortgage is a purchase loan and a refinance loan. But it wasn't always like that. 12 years ago, I could only refinance people. So that means a client that even maybe said, hey, I would like to sell my house and go buy another home, but I don't qualify for a regular loan, or I'm worried about a payment when I buy that next home. I said, well, I can only do a reverse mortgage with no payments on the home you're living in. But then about 10 years ago, we opened it up so now somebody can buy a home with the reverse. So just imagine a client would say to you, I need to sell my home. And, I don't know if I'm going to qualify for financing, number one. Number two, when I buy that home, man, I'm kind of worried about having to make a payment for the rest of my life. I'm in retirement here. Well, now you can use a reverse mortgage to buy a home, which means your payments are optional. You can actually get this loan. We'll talk about qualifying in a minute. And then when you've bought the home, maybe you can make a payment for a year and then you just stop. Maybe you never make a payment. Maybe you make a payment every 6 months and take 6 months off. It doesn't matter. But wouldn't that be nice to be able to buy a home and have that option? If I could buy a home right now that way, that sounds good to me. So this is how a reverse purchase loan can help turn what might not have been a listing into a listing for you by literally giving a client options and giving them not just an option that helps them short term, but possibly for the rest of their lives. Okay. So here's a biggie. You can qualify for reverse when you might not be able to qualify for anything else. Yeah, that's right. Because I have clients that come to me quite often, and realtors send clients and they're like, hey, Ryan, I want a reverse mortgage. And I'm like, I've heard that before. Do you really want a reverse mortgage? Do you really want a loan like a reverse mortgage? Because a lot of people are afraid of them. And then they might say, well, I don't really want a reverse mortgage necessarily, but I'm really having a hard time qualifying for regular loans. My debt ratio is off, or my credit score is too low, or, there's something off. And they say, so I just can't get financing, or the financing I can get, the payment's too high. I say, oh, okay. So you need a reverse mortgage because maybe I can get you a loan. I can qualify you for a loan. And they say, that's right. And I'd say, that's okay, because we can qualify people when you can't get any other financing. And I simply say to them, hey, if you didn't want to reverse, but you just came to me because this is the only loan you can qualify for to buy or refinance a home, that's cool. Use my loan and then treat it like a regular loan. Now you got both. You got a loan you could qualify for, and then you can make payments. So you decide how this loan runs, not your neighbor who had a reverse and he told you how his loan works, not the people you see on TV. You decide how you want the loan to run. You decide how much interest adds onto that loan. You control your destiny. And that's what I think a lot of has been left out of the reverse mortgage for many years. Is many people just thought, I got the loan, and then when I get it, I don't have any control. It's just going to do what it's going to do. And that is far from what really happens. But one thing that's really bad in our industry, our statement doesn't tell people that you have all these options. Statement comes, it doesn't say, hey, if you wanted to make an optional payment or send in half, you could. It just assumes they're never going to make a payment, which is okay because some people don't want to, but maybe some people do. So you have that choice. So imagine purchase loan that you can qualify for and then have optional payments, and you couldn't even get a regular loan. I think that's pretty cool. Met with a lot of you all and your clients. And many times the clients will say to me, and sometimes when you're not there, Ryan, I really don't want to sell this house. I want to stay here. I want to be buried here. And I'm like, no, you don't. But I get what you're saying. You never wanted to leave, right? Yet they end up selling. So where does that happen? Where does somebody who tells you, I'm never going to sell, end up selling the house and listing and using you to do it? Well, we know that when we look at clients and their situations and their finances, many individuals are just barely getting by. And it only takes one event to tip it over. But they still believe there's a way they can try to get a loan to rectify the situation. So when we sit down and talk with them, and then what? Remember, more than half, even up to 60% never get the reverse. At least what we let them know is this: look, you might not be able to stay here, but you can get a house much like the one you're in now. And then we can do the reverse on that. Why? Because when you buy a lower priced home, you can qualify for reverse when maybe you couldn't qualify for a more expensive one. So sometimes they got to downsize, and then we can get them reverse and they can get a house with optional payment features there. So once we start explaining the loan in that way, we end up seeing homes go on the market with you all where the client never had an intentions of doing that. So what is my point to this? We're going to talk a little bit about who is a candidate to list with you, or who might need to list. We'll talk about that and some whatnot we have to help you do that. But the idea is this: you got to look for signs. And I can tell you some of them. Well, condition of home, right? I know a lot of us that own our homes, we don't want them to get what? Peeling paint coming off the walls, dead lawns, all this stuff. Sometimes it's just lack of resources. So even though people aren't telling you, or they saying, I'm going to stay here the rest of my life, sometimes you got to look and say, I don't know if this house is going to make it with you the rest of your life. And you have to be able to have a way to introduce them to options without you saying, what do you mean you're going to stay here? This place looks terrible. Let's get this thing listed. Like, that doesn't work, right? There's no signs at the O-Car store that says, hey, I'm tight on cash. You know, a good realtor that go in the front yard? I haven't seen that one either. So we have to look for the subtle clues. And then I have tools for you to get to them. And we have a way for you to get them to them to help them feel okay with reaching out to you to list. So we'll talk about that coming up. But just know, sometimes people are saying no, and they mean yes. We've been conditioned, right, for our whole lives to say no. No to these salespeople. No to this food. No to this drink. No, 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 right? So we have to know that we got to get past the no to get to the yes. We got to get more like we were when babies. When you're a baby, you could put anything in your hand and you put it in your mouth, right? And then from that time forward, people would say no, no. So we're conditioned to say no. Let's figure out how to get them to open up to you to say yes for that listing. Okay. Finally, on this slide, since the client's going to initially ask you, how does a reverse mortgage work? I want to refinance my home. And you say to them, well, it's kind of like the loan you have now, except when your statement shows up, you don't have to send in a payment. They'll just add what you don't send into the balance. Just remember that, and you'll answer most questions on a reverse mortgage. But they might say, oh, that's cool. Well, can I get money out if I refinance? And you should know that next response, which is, yeah, much like a regular refinance, you can pull cash out on a reverse. You can set up an equity line of credit where you can use it as you need it. That's how the reverses work. But I want you to have that little extra information after they say, how does it work? Just so you can answer a refi question. And now their questions might be done. And now you can get on to maybe, why are they asking? We can try to figure out really why they want a reverse, because what? Most people don't want one. They're asking because something's going on. Okay, cool. All right, so let's move on to an example. Let's see what time it is. Hold on a second. 11:24, I'm behind schedule. I'm going to zip through a couple slides. I need to give you an example of how reverse purchase works, because this is what we're seeing more and more of. If over half the people selling their homes right now were 55 and older, we need to know how a reverse purchase works so you can help get homes for people with optional mortgage payments. Okay, here we go. Let's say you run across a client, their house is 850, and they tell you, I need to sell. Maybe they tried to get a reverse mortgage and it didn't work. Maybe they're just in a situation where they got to get to a different area. The house is too big. They come to you, they say, would you sell my house for 850? Hey, 850 is a junker in Orange County right now. This house is probably more like $1 million, right? So, but they say to you, I need to sell. I'm 73 years old. Why do I put an age up there? Do I like to ask people their age? No, but we determine how much somebody can borrow on a reverse mortgage by their age. The older you are, the bigger loan amount you get. Why? Because your life expectancy, as you're older, of course, you're getting closer to passing away. So we can lend you more money. Because if you don't have to make a payment, we need to make sure we don't lend you too much so that that missed payment doesn't end up being more than the house is worth. So the older you are, if you're 105 and you make it to 106, great. Chances are probably not that good. So we're going to give you a big loan because you're not going to miss that many payments. If you're a youngster, still wet behind the ears at 62, which you really are, I can't give you that much money because you could really not make a payment for what, 30 years. So we need to make sure we leave more equity in the property or have a bigger down payment on the house to have that cushion. Okay, back to my point. So we ask them how old are you? 73 years old. You sold the house for them. Of course, they had to pay off the mortgage they had the costs. They have 400,000 in their pocket and they're telling you, I need this 400,000 to do a few things for me. I got to get a house I like. I need to keep money in the bank. And I'm a little worried about taking on a big mortgage payment or even qualifying for a mortgage. Oh, well, that's a pretty tall bill when they only have 400,000 cash, right? Well, how about this? They do find a home they like at 600. So now we're thinking, geez, they wanted to keep money in the bank. They didn't want to be burdened by having to make a mortgage payment. They only got 400. This house is 600. I still need a way to figure this out. Well, if you do the reverse purchase, this is how it works. Based on a 73-year-old borrower, they put down 259. I give them a loan for 341. So now we have a $600,000 purchase price. Yes, good. They also have 141 left in the bank because the 400 they had, they only used 259. We've made the mortgage payment optional. Even though they used a loan to buy this home, they used a reverse mortgage to buy the home. And what does that mean? If they don't want to make a payment, they don't have to. Optional mortgage payment. FICO scores, we can take low ones. Income, a lot of people just qualify in Social Security. That's it. So what have we done here? We've taken a client who may have been really tight in an 850 house, maybe no savings. We've put money in the bank. You've got them to another property. You've given them a loan where they can stay there the rest of their lives. They can make payments if they want to or they don't want to. And we've done all this and they may not even qualify for a regular loan. So hopefully you can see where this can be powerful. We still need to know who needs these so that way you guys can get to them, right? We'll get to that coming up. Hopefully this slide makes sense. I really jammed through it. Couple things. When you do write an offer for a client that's going to use a reverse mortgage to buy the home, we are a little more tedious in terms of underwriting. That doesn't mean that we're harder necessarily. I mean, after all, we can give someone a $350,000 loan and they may only have $1,600 a month Social Security income. That's pretty crazy. And they may have a 500 FICO score, right? So it's not that we don't give people money, but we are a little longer in underwriting. So pre-approval is what you should always ask for if a client's going to buy a house the reverse. We don't do automated underwriting like regular loans do. We manually underwrite the loan. It takes me sometimes a week to 2 weeks to manually underwrite, pre-approval loan. So we need some time. And we definitely want to make sure this happens before their house sells. A client has to do counseling. What does that mean? Well, the government just wants to make sure that we as reverse mortgage people are doing a good job explaining the loan to clients. So they have them hop on the phone, talk to a nonprofit, third-party company, and that company makes sure that they understand how the loan works. They produce a counseling certificate. Before you can even really get into escrow, you could, but before we can do an appraisal on a house, you need counseling. And by the way, we have to wait 8 days to get counseling before an appraisal can be done. So you can see why we want to get the counseling done earlier in the process. We'll help you with this stuff, by the way. You don't have to memorize this stuff. Really, what I think what the most important thing is that I mean, for us, we know you guys are out there working 7 days a week, right? So it wouldn't be fair to think that you guys are working and we're not. So we have a realtor hotline for you all. And we usually man it 7 days a week. We usually man it with somebody who can answer it and answer a question because you might be with the client, driving out to a client, need information whenever. So call that number 24/7. Writing an offer on a reverse. A client, you're sitting with the client that asks you a question about a reverse. You think a reverse purchase might help. You want to know anything about reverse. scenario and you need that answer, call that line. And of course, we got staff that's going to answer the question for you. Okay, so I made it through the first part. I'm a little behind. I could probably take 1 or 2 questions and then we'll get the rest after, or a lot of your questions I know are going to be answered with the next half. Any questions though that you guys that I should pick up right away? What do we got?
Yes, so we do have 2 questions. So the first question is, I had an accountant tell me she was told if she passed permanently, the bank would get the equity, not her heirs. I did not think that was true, question mark.
Okay, so yeah, that's not true. I mean, maybe she had a product from a long time ago or a different kind of. There are some companies out there that are doing products that aren't really reverses, so I don't know what she had. But on the government insured reverse mortgage, which is the majority of the loans we do, and also there are some private reverse mortgages as well that we do. And those reverses are designed for lending money, and when the borrower is passed, the only thing that really needs to be paid back is what is owed. It doesn't matter how much equity is in the property, that's going to go to the estate, the heirs. So the bank can't take over that house and take the equity. The investors can't take the equity. It's going to go to the heirs. And if the heirs don't even show up and there's no estate, then it'll go to probate and the state will decide what to do with the equity, right? They'll figure out who it gets passed on to. But at the end of the day, the investors or the banks are not getting the money because it's just a loan. Remember, this is a lot like a regular loan, optional mortgage payments. So ask yourself a question. On a regular loan, does the bank get the equity? No, you just borrowed money. It's basically the same thing.
Okay, we do have one more question. If they decide they want money out later on down the road in the reverse mortgage, is it refinanced with new loan fees?
Okay, so let's see here. I'm going to answer this question in a couple of different ways here. Number one, if you set up your loan and you had an equity line on the reverse, you may just have to call in and request the money and they'll send it to you. If you have used all the money on your reverse already and you're just not making a payment, but you have no money available, well, then you can refinance. If you refinance a reverse, depending on when you had your original reverse done, many times you can do it without any fees at all, or depending on how much mortgage insurance you paid up front, because a lot of these are government insured FHA loans, you may pay a small reduced amount, but you certainly can do a refinance and not have to take on the upfront costs, which we'll talk about in a minute, that you did when you originally did your reverse. Okay. All right. I'll just answer that quick question, then we'll move on. I see one from anonymous attendee. What would happen when the son or daughter puts a parent who has a reverse in a long-term care facility and wants to end out the home to pay the, okay. So I think this is much like the question we had before in terms of who gets the equity. So whenever the house is sold during a reverse mortgage, remember, the only thing that gets paid off is whatever the loan was. So whatever equity is left goes to the estate, goes to the heirs, goes whoever is maybe the trustee of the trust or handling the sale, etc. So yes, the family will end up with the rest of the money, which may very well go to pay for long-term care costs. Okay, rent out the home. Oh, you can't rent out a home with the reverse mortgage. Sorry about that. Primary residence only. We'll talk about that coming up. Okay, let's hop back into it. So remember I said that, reverse mortgages are around and they've been around for a long time. And many of the reasons for that are not necessarily because people just want reverse mortgages. It's because it's a tool that a lot of individuals need. Okay. And, back in the day, right, we had a lot of things change in our world, especially with corporations. And we have a lot of older homeowners. As a matter of fact, we have 10,000 boomers that are turning 65 every day. We have 100 million boomers that are the ages of 57 to 75. Here's the kicker, is a lot of our boomers are retiring without enough savings. And for that matter, every generation is under saved, even Gen X, Gen Y. None of us have saved enough what we need. But I'll say the boomers were kind of put in a corner a little bit. And here's why I say that. Years ago, 15 years ago, I used to work at Prudential. And what I learned is that in the 70s, really, a lot of the corporations started going through shifts where they were saying, we can't afford these pension plans. I mean, you know, if you worked at Sears in 1973, you would have a pension plan, even if your job was just selling tools or selling lawnmowers. Hey, that'd be great. I'd love to get a pension plan doing that. I love lawnmowers and tools. I would do that for a pension plan all day long. But Sears is what? Going bankrupt. So things change, and they change quickly. And the boomers, I believe, were really the first generation that I could see when I was working at Prudential to experience that much of a shift in how they had to save for retirement. So it just didn't happen quick enough. And so while their parents had pension plans, our boomers didn't. And now guys like me, I was never knew about a pension plan, so I'm trying to save. But our boomers, I think, really got the short end of the stick when it came to saving. They didn't really know they had to save so much so quickly. So we have a lot of our boomers underfunded in retirement, very underfunded. About half our boomers, no retirement savings. The half that do have retirement savings, maybe only less than 20% of those, I think, have like $100,000. So we just don't have enough money tucked away in our bank account. So this is why we are looking at home equity more than ever to help in retirement. Okay. And as a matter of fact, if we looked at home equity, we'd see that right now, our 65 and older population, you know, I have here, they have about 7 trillion in equity. That's already way past. I've had to update the slide like almost every 6 or 7 months because the amount of equity that we have in our homes just keeps on going up. I think right now we're at about 8 trillion in equity for our 65 and year older homeowners. So I think you can see the writing on the wall here. We are more and more as a society are turning to look at our homes as a way to supplement retirement. And, you know, it's not right or wrong, or it's just the way it is. We need to take care of ourselves. And if you're in Southern California, hey, guess what? Your house is doing so well. We're picking up so much equity, so much more than a lot of other states, that it's great that we have it there to use. So this is why the reverse mortgage has legs. In addition to being able to easy to qualify for, it is a way to convert some of that equity into usable money to aid in retirement. The purchase, same thing. Clients can sell a house, take some money and put it in the bank, like our example showed, and then use a reverse mortgage to buy the house. So whether you're refinancing or selling and using reverse to buy a house, it's all about, we really need, and we as a society, we're using more of that equity to help supplement retirement, right? Okay. So what happens in the future with these things, right? So let's say, oh, this really points to bullet point number 3, by the way. This is how I want you to pick up listings with reverses that have already been done. I'll kind of get to that a little bit more as I get through this slide. But what happens when a client has a house with reverse mortgage and they've passed away and the heirs are saying, what do we do? Well, let's say the house is above water, it has equity. That means the reverse mortgage balance is less than what the home is worth. Well, in that case, pretty simple. It's much like a regular loan. The house can go on the market and sell. Whatever is left over after the loan is paid off, it goes to the estate. Maybe the heirs want to keep the house. Okay. All they have to do is refinance or get their own loan to pay off what was owed on the reverse mortgage. And of course, the house goes in their name. So this is a lot like a regular loan. A reverse mortgage is really like a regular loan at the end. And for that matter, it could even be a little better than a regular loan in that we give the heirs up to a year to get control, to pay it off, and they don't have to make a payment while that year is going by. So maybe that could help them either sell the house with you all or figure out how to refinance. Remember, we see more people sell, which is why it's important for you all. I'm going to get back to that in a minute. Let's talk about the house being underwater. Hey, if it's a government insured reverse mortgage, heirs really don't have to inherit an upside down home. Why is that? Well, because it has FHA insurance on it. So at that end point, when the home is sold, if the house is underwater, FHA pays the difference. Well, what if the heir wants to get the property and they don't want to sell it, but it's upside down? FHA will say, let's get an appraisal. Once we know the value of the house, whatever the difference is between the value and what is owed, FHA is going to handle that. As a matter of fact, they will let the heirs get the house for 95% of what it appraises for. So they can actually get the house under market value, and then FHA makes up the difference. Okay. So that's how an heir never has to worry about inheriting an upside down home with a government insured reverse. Doesn't have to happen. Now, the heirs don't want the house, they can just do nothing. Eventually what will happen is it will go into California normal foreclosure proceedings. Person passes away, the heirs don't show up or say anything, the investor says, or HUD, if it's FHA, right, will say, we have to start foreclosing. They'll issue an NOD. NOD goes out 90 days later. If nobody responds, then it goes to what? Notice of sale, NTS. That's another 20 days or so. So maybe in 120 days, 110 days, the house would go to auction at the courthouse steps, right? But the heirs can get involved and stop that if they want to. Finally, they could short sell it. If the heirs don't want the house themselves, but they don't want it to go to foreclosure, they can have one of you all list the home. So this is the general idea from this slide. The government, the bank, the investors, nobody wants this home. They're giving the heirs 12 months, as a matter of fact, to figure out how to sell it or get a new loan because they're awful at foreclosing. FHA has lost their shirt time and time again when they have to foreclose and put the house on the market, and they don't get any money by doing that. They're just trying to get their money back that they lent, right? And they do terrible. The houses stay on the market sometimes a long time. Windows get broken. The house just, it becomes distressed. And so FHA really wants the heirs to come and get this house. They'll give you a year to do it. So I hope you can see here, heirs, this is your opportunity. So with that being said, let's talk about who you take control of the situation. Number one, we'll give you access to software that shows you who has reverse mortgages in your area. That's great to know. If you nobody has a reverse mortgage, if you meet somebody, anytime you meet an older homeowner, I hope you're asking about their loan, because if they have a reverse mortgage, this is what you really need to do. Whether you do it in a written form or you just ask them, oh, you got a reverse mortgage? Oh, okay, very good. And I'm just curious, have you set up a plan for your heirs to get the property? I think you'll be surprised when most people are like, well, not too clear on that. Okay, this is where you can prove your worth and get a listing. Number one, you need to know, first of all, if the house is not in a trust and they're the only people on title, the borrowers, well, that's already probate. That's just normal stuff. So that's where you're going to insert yourself and make sure that they have their title taken care of properly so the heirs can get the house out of probate, right? That's just normal business. But when it's a reverse mortgage, well, they might be a little closer to that point in time. So you're going to really be able to help. And also, if they don't have the trust, have some recommendations, 3 attorneys, 3 places for them to get a trust, and give them your card and say, make sure your kids or your niece and nephew have my card, because when something happens to you, I'm going to be able to help them get control of the house. And here's what you have to do, by the way. So when a borrower passes away on a reverse mortgage home, if nobody says anything or nobody calls a servicing company, eventually they get notified. I believe it's by the Social Security Administration. And what will happen is if they don't hear from the heirs within 30 days of them finding out the borrowers have passed away, they'll put it into foreclosure because they think nobody's around. The first 30 days they can do that. So the first thing to do is say, heirs, homeowner, whoever you're talking to, let me help you make sure that when they pass away, that I will get to the servicing company and let them know that you're interested in doing something. Step number one. Step number two, guess what? If a trust is not set up and if the mortgage company doesn't know who the heirs are, they haven't been given authorization already to speak to the heirs, they won't. So imagine that the house is not in a trust and no authorization has been given to the servicer to speak to anybody. They won't talk to anybody. They'll just go through foreclosure because they don't have authorization to speak to anybody. The house wasn't in a trust and the heirs are out of luck. So you're going to stop that by ahead of time saying, look, what we need to do to make sure that your kids or your nephews, whoever get the houses, let's make sure your servicer has authorization to speak to them. And let's make sure that the house is either in a trust or, I know this isn't a great way, but like a transfer on death deed or putting them on title, but at least avoid probate. Now, what you're doing too is getting the heirs involved too, right? Because you're going to say, I'm going to make sure that your kids can get the house. So one of the things you're going to do is get authorization to the service company. Here's my card. Let's make sure we get this set up before something happens to you. Now, what if you find a house that has a reverse and they've already passed away and you're talking to the heirs? Well, if the heirs find out that the servicing company won't talk to them, what I want you to do is find out who the servicer is and just send in a listing or contract with something that says you filed probate paperwork. So that way, even if the servicer won't talk to anybody, they see that something is happening and they may forego filing for foreclosure right away. All right. Taking notes on this might be a lot right now, but we do have this information for you. and we'll tell you how to get it. But I want you guys to, whenever, if you want to go out and find houses that have reverses on your area and start this and write a letter and say you have a specialty in helping this happen. Hey, what a great way to get an introduction. If you ask people and they have a reverse and you start talking about it, this is happening more and more. And we have more and more people passing away with reverses. And I absolutely have seen agents pick up listings. Just set yourself up properly in the beginning. We'll help you do that. Okay. All right. Moving on. Hey, let's see if we get through this miss. And then the next slide is going to show us how we get foreclosed on. You can get foreclosed on with reverse. We can mess it up. Let's not make sure that doesn't happen. But let's run through these questions quickly. Let's make sure I've done an okay job today. Number one, does the government or the bank own the home? Well, remember, this is a lot like a regular loan. You've just borrowed money. You've just signed a note. That's it. You haven't given away ownership of the house. So the government bank does not want the home. Remember in the last slide, they're giving the heirs 12 months. They don't want this home. The equity remains with the estate, the heirs, etc. Will heirs lose future appreciation? Well, hopefully we went through this a little bit. Whatever equity is left in the house when the borrowers pass away will pass on to the estate. Of course, it's easier to get that equity as long as you have title set up properly and we do all the things I just talked about. My heirs can't inherit the home after I pass away. Well, that whole last slide was about how you do inherit the home. So we know that they can. Finally, as a borrower, if I end up underwater, because let's say I haven't made a payment in 30 years and the house underwater, is something going to happen? Am I going to get a letter or something? No. You remember, this loan is for your lifetime. And no matter what the economy is doing, the housing market, how many payments you've missed, the deal is you stay there for your entire life. The loan is for your lifetime. With that being said, let's find out how you mess up a good thing. Number one, if you get a reverse mortgage and you don't live in the house and you throw it on Airbnb, hey, I'll call on you. I'll complain. That's not the way these loans are designed to be, right? It's supposed to be somebody living there. Now, you can rent a couple rooms out. You can rent up to 2 rooms and still live there. So you can make money from the house, but it's just designed that you're supposed to be coming back there to make sure the house is okay, right? You could even be gone for a year. If you got to go to a nursing home, let's say we have 2 borrowers that did the loan. Let's say one has passed away and the other one needs to go to a nursing home. You can still keep the reverse. As a matter of fact, you could be gone for a year. You just got to get back before that year is up. Let the servicer know, hey, I was gone for a year. I'm back. Or if you are unable to do that, maybe you're incapacitated or incompetent. Hey, the heirs can call the servicing company and go, hey, we have them back home. They're released. Here's the release paperwork. Servicer will say, you're back. We see that. We're going to verify you're back. And then what? You can go away for another year. So you could be gone for 5 or 6 years from a reversed house, but you just got to do it properly. You got to stay in communication with the servicer. That way, you know when they left and when you're back, it hasn't been more than a year. There we go. All right. Mess up a reverse mortgage, don't pay your tax insurance. You will get foreclosed on. We will foreclose on you quicker than even a regular loan, right? Because regular loans, if you don't pay tax insurance, they'll what? They'll start to make it part of your payment. Well, since we're not required to collect a payment on a reverse, we're like, oh man, they're behind on taxes. We need to let them know right away to get caught up. We can't wait. So if you don't pay your tax insurance, you can get foreclosed on. If you don't pay your HOA, it's not necessarily that we're going to foreclose, but HOA can foreclose. So no matter what, let's pay all these things so you don't have to worry about being foreclosed on. Finally, you're going to maintain that home to FHA standards. What does that mean? It just means that keep the house a condition that it was when you got the loan. If windows get broken and things start happening, we're not going out there to check it out, but maybe you got a nasty neighbor who's like, I saw on title they have a reverse, or I know they had a reverse, or they told me they had a reverse, and I see they have a broken window. I'm going to find out who that servicing company is and send a letter in. Now, it's kind of hard for them to do that, but the servicers may see maybe the county has put some kind of violation for having something wrong with the house, and they have all the web crawlers, and maybe the government or the investor has seen that you had a violation for having something wrong with the house. Anyways, the point is, just keep the house the condition as you got the loan, and you won't hear from us. You won't get in any trouble. Nobody's going to care. The house, doesn't mean it has to be painted every year. Doesn't necessarily mean you have to keep the lawn, super green. We're just worried about health and safety issues more than anything. Okay. So this is really how you can mess up a reverse mortgage. If somebody has said they've gotten foreclosed on a reverse mortgage, it's usually one of these 3. Now, up until about 8 or 9 years ago, there was another problem we have that we solved. And that was a government insured reverse mortgage. We used to not protect both borrowers if one was under 62. So if somebody said a widower got foreclosed on after the main borrower passed away, it's possible that widower never was on the loan and they do have to sell or refinance. We stopped doing that with government FHA loans about 8 years ago. So we won't do that anymore. Okay, but that's the one time you might see that it's not one of these three. In general, I see it's usually not paying tax insurance. By the way, if you ever hear that foreclosure rate is high with reverse mortgages, well, you got to understand something. When somebody passes away, if the heirs don't get a hold of the servicer within that 30 days, it can go into foreclosure because they're trying to get somebody to show up. The borrowers have passed away, so we're not really foreclosing on borrowers. We're trying to get the heirs to step up and do something. So of course, the reverse mortgage industry would have a higher foreclosure rate than regular loans because first of all of our clients are older. Second of all, we have to get the heirs to do something. So that's one of the reasons why you might hear our foreclosure rate is higher. It's not because we're foreclosing on people that are alive in their home. It's generally because we need to get the heirs to take action. Okay, here we go. I'm almost behind. Remember I said reverse mortgages are based on age. So if somebody wants to buy a house, their down payment, how much they're going to get for the loan is based on their age. If you're going to refinance, based on your age, how much of a loan you're going to get. So every age is different. What we did, well, we have a chart that we use, but those charts change. So I could send you the chart. It would be no good. So we created an app that you can just download on your phone. It's free for you to use. You don't have to call into a reverse mortgage company. You don't have to email me or call me. You can just do it right on your phone. So if you go to REV, the number 4 PUR, and download the app, then you can put the age in, put the purchase price of the home, boom, it'll calculate the down payment. It'll tell you how much the loan amount's going to be. One thing is that if you come across houses where people want to buy a house or they want to refinance a house and it's worth more than I'd say about 900, we're probably going to look at a non-FHA reverse mortgage because in general, the FHA reverse mortgage starts to get really conservative as the houses get expensive. We stop giving more money. So the private industry will lend bigger amounts. And so sometimes they look at the private loans. Why don't we just look at the private loans all the time since they don't have mortgage insurance? Because the rates are higher in the private industry. So the government insured reverse has FHA mortgage insurance. So you have upfront mortgage insurance you have to pay, and you have 0.5% annually that gets added to the loan. So that's where your expense comes in a reverse mortgage. It's an FHA loan, right? It's a government insured FHA loan. So just like a regular FHA loan, you have those mortgage insurances you have to pay. Otherwise, the costs in reverse are basically the same as regular loans. Rates are about the same. You get adjustables at about 2%. You get fixed rates at about 3%. So right in line with normal rates. It's just on the government insured, the mortgage insurance is more expensive. So remember, the private non-government reverse mortgages don't have mortgage insurance. And so some people say to me, Ryan, that sounds better. I don't want to pay $15,000 in upfront mortgage insurance or $5,000 in upfront mortgage insurance. I want that non-government loan. I'd say it's kind of a teaser because the rate can be a few percent higher. So even though you'll save money in the beginning, it'll cost you in the long run. So why would you take that loan then at a higher interest rate? Maybe you want a big loan. Maybe you need $1 million reverse mortgage and the government insured would only give you 500. So that's why you take a higher rate and go for the non-government loan. Anyways, if you have questions on product specifics, can't get too much into detail, but we can help you with that. At the end of the slide presentation, of course, you'll get my cell phone and my email, and you're welcome to ask any questions you want. When you download this app on your phone, you can actually hit a button and ask a question right from the app as well, and that hits our email, so we get back to you there. All right, so I went through a crash course on the reverse. All right, let's talk a little bit more about relationships in reverse mortgages equaling business for you and how we want to help you with that too. Look, at the end of the day, I don't want this to be like a monster or anything big you think you have to learn. I just want you to see, yeah, I got an older person in my database, maybe, and well, maybe they'd be interested in this. I have a neighbor, they're older, their house is in really bad shape. Maybe this is something for them. But I don't want to make it hard for you. I don't want you to have to think of some way to make that happen. So the first easy thing we just want to do for you all to help you out is we created a software, a website. It's called Go Courtum. You see it right there. Just add .com on there, and you can basically hop on there, and for free, if you got a couple people, we will mail them information, not just on the loan though, because we know some people just take and round file a reverse purchase loan flyer. That's okay. I get it. My feelings aren't hurt. Instead, what we've done is we've looked at older homeowners that have sold their homes with realtors and us doing the reverse purchase and you all doing the real estate transaction. And we identified some of the questions those older homeowners were asking during the transaction. And we've taken those questions and we've turned them into newsletters, and we've had you answer the questions in the newsletter. Your name goes on it. We send it to a client that you think might need this, and we'll send it to them for 6 months. Like I said, we can't do this for your whole database. Whew, that'd be expensive. I'd be out of business. But I'll do it for a few people to see if you can get a listing or get a relationship out of it. So you hop on Go Court 'em, put their name, address in there. If you got an email, we'll email them too. And then we'll send them a few newsletters and we'll put it from you. So we're on there, of course, for legal and compliance purposes. But it's basically saying things like, did you know Prop 19 allows you to transfer your property taxes? Hey, did you know that cash buyers, if they come to your door and they say they're going to save you money on realtors, you're going to pay a lot more because they're giving you less for your house? Hey, did you know that hero loans, be careful of them, they can be expensive. So we try to put information in front that we believe they think is interesting. And then if they have a question, hopefully they'll call you or they'll get in touch with us and we'll ask who was on the newsletter and we'll let you know somebody's asking questions that are indicative of somebody that might want to sell their house. Hopefully that will help you. All right, so let's Go Court 'em. It's free. Have fun with it. I don't know, put your neighbor in there. Check it out. We'll see what happens. Otherwise, one more thing, a couple things. We have all this, by the way, on our website and videos, and we're going to tell you how to get to those free in a second. Title Pro, you may have heard of this. Maybe you've been to our course, but we do videos on using this database. We'll give you logins to it. And this is where I told you, if you want to know, like in your neighborhood, who has a reverse mortgage already, you can find out on this. We'll show you how. We'll also show you how to use the software for what? We know that highly leveraged older homeowners tend to need to sell. So we have videos, just watch us. Rob and I pull data on who we think is an older homeowner that might need to sell their house, right? And we pull the data. We actually hop in the car and go knock on the doors just so you can have fun and see how it works. And you know, one of the things that worked well when we did it, you'll watch a video on it. We pulled 3 homeowners, older, who had mortgages. And then what? And we asked it to see who had a tax default. Because we know if you're retired on a fixed income and you have a tax default, there's usually something going on. And would you believe we only went to 3 doors. And the final person was, yes, they had a problem with their job. They had a tax default. They were needing help. And we found it just after 3 shots. Hey, you didn't have to go knock on their door. We could have sent them what? One of the flyers that you can get off our website. So at the end of the day, I think the idea that I want you to get is we like to have fun, and we want you to have fun seeing how you might be able to pick up something with an older homeowner right in your area, just doing a little bit, basically what you're already doing, and maybe just a few more minutes on the stuff that we do. And let's see if we can drum up business for you. Hey, I'd love to get a loan out of it, but if you get a listing out of it, hey, that gets me going just as much, because I love the prospecting. I love turning the soil over. I love finding the diamond in the rough, right? And so when it happens for you and I'm part of it, I'm just as excited. So use the stuff we've done. We've been doing this for 15 years. Try to grab some of the stuff that we've done and see how it works for you. We're here to help you. You know, we're right down the street. We're in the city of Orange. So we're accessible, Rob and I. Okay, we want to help you. We're just going to tell you how you can get a refresher on what I've been through, how to get access to our website where we have lots of free tools. If you want to use that, Go Court 'em or get some flyers, watch our videos on how we've drummed up some business that you can get, watch all of it. We're going to tell them how to get all of this information.
Thank you, Ryan. So I did notice that someone mentioned a problem with our app. I do want to let you guys know that we are working on it. So we will update you guys once everything is working on Google Play. Okay, so everyone will be receiving 2 logins in their emails today. The first one will be coming from Title Pro 247 to set up your Title Pro account. The next one will be coming from us for our website. All you have to do is click the activation link in the email and set up a password. Once you're in our website, you will see a few resources. The first one is our course refresher, which is a video series of 6 videos that will cover what we talked about in class today. Each video is only 8 to 10 minutes long, and you can watch it at your own time and your own pace. Ryan, if you can move to the next slide, please.
Oh, yeah, sorry. I'm sleeping.
It's okay.
Oh, and I went too far. There we go. Okay.
Okay, so next you will see downloadable marketing materials. We have a variety of newsletters, flyers, door hangers, postcards, and more for you to print out. You can put your information on the back of them. Some of them you can put a picture of your headshot or a business card. Finally, we have our videos and tutorials that you can access. We have tutorials on how to use Remind and how to use your new Title Pro logins to find those older homeowners that are likely to sell in your area. Ryan, if you can move to the last slide, please. Okay, so that's our complimentary access to our materials and different software. If you have any questions about our logins and need support, feel free to call us at 888-242-5959. Again, that is our realtor hotline, and we will pick up the phone for you as much as we can. If you need to email Ryan or Robert directly, here are their email addresses. And the website, thereverseeducators.com is our agent resource website. You will also be able to see our future classes at Orange County Realtors Association there as well. Ryan, would you like to move on to questions now?
Yeah, if we have any questions, and then I'll close it up while we're waiting for questions here. Again, I hope you can see from this class that this isn't about, for me, about people just getting reverse mortgages. It's really not. It's more about how I believe the reverse mortgage is an opportunity for you to be able to find out what's going on with the client, perhaps end up listing their home, not doing a reverse at all. And as time goes by and the years go by, I've been doing this and working with you all. I mean, 11, 12 years I've been working with you all, and I just see it happening more and more, where you having the understanding of what it does and why it's out there is putting you in a better opportunity all the time. So if you don't do anything other than use me to help improve your business and find more clients, cool. One day, hopefully I get a loan so I can pay my bills. But in the meantime, let's just make sure that the clients know that you're the best resource for all things when they're getting older with the home. And that's the point of the story. If you email me and I don't respond right away, it's not because I don't want to get your question answered. It's because sometimes I get a lot of emails, and so I got to get through them. If I don't respond to you in 48 hours, feel free to email me again and give me a nudge and say, dude, I emailed you a day ago, man. Help me out. I got this question. If you can put if you want to put my cell phone number in the chat form, Renza, you can. I usually can sometimes respond to a text quicker if it's a quick question. So you feel free to text me. Otherwise, this is a live Zoom, by the way. We don't record these things. We're fresh. We're always trying to figure out a way to bring something to y'all. And I hope I get to see you in person this year coming up. Please let me do a live class again, because I am zoomed out, but still happy to be with you today. Any other questions, feel free to get in touch with us. Thanks again for joining. Is there any questions before I tune out?
Don't see any questions.
Okay. Cool.
So I think you can wrap up the class now.
Thanks for coming. We'll see you all soon. Have a great Thanksgiving.